What's up, guys? Have you ever wondered why many traders are actually switching from trading forex markets to now trade synthetic indices? Have you ever imagined the reason behind them? Running away from trading the normal currency market that we all know to synthetic indices. After trading both markets for several years, I finally made my choice, and in this video, I'll be unveiling the reason why I actually decided to focus on synthetic indices than the normal forex market. So if this is your first time of viewing my content, kindly make sure you subscribe to this channel, share this video to others, and also join our Telegram channel where we share daily updates and free signal. Without wasting much time, let's dive into the video. Now, what is the synthetic market? Because you need to understand what this market actually is so that you can know why a lot of persons are actually running away from the normal currency market, which they have lost a lot of money to now trade the synthetic market. All right. So the synthetic market is actually an algorithm driven market that is created to mimic the real world financial market. What do I mean by that? That market is an algorithm driven market, meaning that it is a simulated market that is created to behave exactly like the normal currency pair market or the normal forex market that we know. But the beauty thing is there are some factors that they have designed into this market that made it more adaptable for traders to actually, participate actively well in that environment rather than the normal currency pair whereby you have a lot of factors that is influencing price movement, which has been the major reason why a lot of persons are actually losing money when it comes to this trading journey. All right. So, for instance, when it comes to the forex market, one of the major factors that influence or cause volatility in the market is what we call fundamental news. But then, when it comes to the synthetic indices, there is no such thing as fundamental news. It is basically dependent on your technical analysis, because I've seen a lot of traders who is well grounded with technical skill, but then they are still not profitable. And I'm wondering what is the reason behind this particular experience that these traders are having. But it boils down to me that it was because of the fact that they are trading forex market or the currency pair, and they are not well grounded with fundamental analysis. And fundamental analysis is not something that you can actually learn and make predictions with accuracy, because it is dependent on economic factors like things that are happening in other countries, so which will become stressful for traders to actually gain that knowledge in to trade the forex market successfully. But when it comes to the synthetic indices, there you don't need any fundamental news to actually succeed in it. All you just need is your technical skill, and that's why I'll be making some comparison after this so that you can actually know why synthetic market is becoming a hot cake and why a lot of traders are actually switching to trade synthetic indices. Now, when you look at my screen here, this is an analysis I made on USD JPY. So this is a normal currency market that we all know. This is USD JPY, right? This analysis was executed on the first. If you look at the date, this is the first on the 1st of July, right? 1st of July, that is about how many days ago? And for over 3 days, this is how far the market has moved, because I've traded this market for so long. So I actually can tell you that this is how this market actually behave. And you can imagine that after placing an order for 3 days, this is how far the market has moved. And you're actually anticipating that the market should actually move all the way to this level. So it can take like 2 weeks before this thing happen. At least you see that the major reason why you have this volatility here is because there is an high impact news, which we call NFP. So these are the things that actually cause volatility in this market. But then when it comes to synthetic market is not influenced by any news. It has constant volatility. What does that tells you? You don't need to wait for any news event before you can expect that, oh, market is going to move very well today. Anytime you wake up, middle of the night, anytime, any day, the volatility has, the synthetic market has constant volatility. All right. So another point I want you to consider is market hour. Now, you know that the forex market is open Monday to Friday. For example, as at the time of recording this video, it's actually Friday. That means at the end of today, by 10 p.m. today, I will not be able to do anything on the chart. The chart will start moving just like you are seeing on my screen. There will be no, I will not be able to make any trade entry. Now, take for instance, suppose you have a business that you are running aside trading, or maybe you are even working, and during the week you are always busy, right? And the only time you have is probably by weekend, and you also don't want to give up on your trading journey. You still want to trade, but because of the fact that the forex market will close by Friday, it makes it difficult for those who are actually having other side business to do, or who are actually working to trade this particular market, because they will not be available as at the time that you will be free. That makes it you know that makes it very, very rigid, because it will not confine you to actually work within that 5 days that they are available for you to trade. But then when it comes to the synthetic market, this is another analysis that I made yesterday. If you look at if you look at this date, it's telling you that this analysis was made what? This trade was executed on the 3rd of July 2025, just as you can see from my screen, right? And this is how far it has gone. That is to tell you that this market has constant volatility. The profit target for this is already around $500 from here to this particular level using the least lot size. That is to tell you how the volatility is actually constant when it comes to this market. Another beauty thing about this is when it comes to the trading hour of the synthetic market, it is open 24 hours of the day from Monday to Sunday, and this makes it very, very flexible for everyone who is interested in trading to actually trade at their own comfort level, right? So that means that if you are busy during the week, you don't need to panic or trying to, force trade by fidgeting that the market might close by Friday and you will not have opportunity to trade. No, if it is weekend that you are free, you can also trade this market successfully without any constraint. There is nothing like today is weekend, there will be no volatility, this and that. There is no such thing. All right. So because of that, this synthetic indices has made it very, very easy for many traders to actually make their choice, because when it comes to trading, what you need is freedom, and synthetic indices will give you that freedom to actually make the decision of when you want to trade the market and when you don't want to trade the market. And anytime you are coming to trade the market, you are actually coming to trade the market with maximum availability of all the resources that you actually need to know. Now, when you look at the structure of this market, it is very, very clean and simple. Look at how the market is actually moving. So if you are making an entry from here, it is very, very clear. There is no ambiguity or confusion of, I don't understand why the structure of this market is or what is happening here, right? So it is very, very easy for you to actually trade. Now, another point I want to make is the news impact. Now, remember what I told you from the beginning of this video, that the normal forex market is actually influenced by what? Fundamental news. That means that if there is no news, the market will not move in a certain way. And trust me, fundamental news has been the reason why a lot of traders has blown their trading accounts. It has been the reason why a lot of traders are not actually making reasonable amount of money from the market. Now, let me share a quick story. There was a trade I took. I can't remember this particular pay, but that was some time ago. Now, that trade, it was early this year I actually took that trade. I held that trade for complete 4 days. Now, on Friday, I think I made the trade execution on Monday. Then I held it for like Thursday. Then on Friday, Trump came in to make one, statement, and the trade I was holding for 4 good days and was giving me a profit of about $750 crashed down to hit my stop loss at within just 5 minutes of the speech that Trump has made. So you can see how ridiculous it is that you were holding a trade that was running in profit for like 4 good days, and only for that trade to actually reverse against you in 5 minutes. That is the effect of fundamental news, and that is the reason why a lot of traders has become so frustrated. Some has given up, some don't even know where to start from. But the fact that synthetic indices does not have this effect, there is no fundamental news. You don't need to look at calendar of, is Trump going to say anything today? Is there war? How is it going to affect the market? All you just need is your technical skill. For instance, For me to be able to make entry here, I need to go to forexfactory.com to start checking news, start reading books, try thinking of what is going to happen in the US before making trade execution. But when it comes to the synthetic market, I don't need to bother myself with all of those things. All I just need is my technical knowledge for me to do my technical analysis, to look at my POI, then I'll just make my trade execution. And I am rest assured that the trade is going to move with constant volatility. So it is very, very flexible for traders, and traders who are, especially if you're a beginner and you're just getting started with your trading journey, it will be very much comfortable for you to start trading synthetic indices, because the chances of you blowing your account is very, very slim when it comes to this, especially if you have learned to a great extent and you now know what you're doing. Now, if you have been trading before now and you are not making consistent results, and you are thinking the reason why you're not making money is actually because of maybe you don't know much about technical analysis, trust me, the issue is not technical analysis. The issue is because you may not be trading the right market. That is just pretty much about it. All right. So another point I would like to make is this: in the forex market, there are a lot of things happening underneath. Now, there is something they call broker manipulation. How does broker manipulate the market? Now, broker have a way of trying to enrich themselves from traders' pocket. For example, there is something they call spread. Spread is the difference between the ask and the bid price. Now, what does spread means to the broker? When you see a broker that has high spread, they are indirectly charging you more than what you should be paying. Now, when it comes to synthetic indices, they have an extremely tight spread, and the tighter the spread, the better for traders, because it's as good as they are not charging you for anything. That is why when it comes to the forex market, if you make a trade execution, most of the time your trade will start with minus something, and you'll be wondering that you just entered this trade, the trade has not even moved anyway. How come you are saying -$5, -$3? That is because of spread. Another thing again that you can notice when you are trading, another challenge that you will face when you are trading the forex market is what we call slippage. What does slippage mean? You just click a buy order from this level, right? The market is supposed to execute your trade immediately. Now, what happened? The market refused to execute your trade, and maybe when the market has moved all the way to this point, it will show that this is where your execution is. So slippage is another thing that the broker will actually use to extract money from you, to allow you to lose more. Now, the difference is you might be thinking is normal. If you are supposed to enter a trade from here and your stop loss is here, that means that you have a very tight stop loss, right? But in a situation where there is slippage, you will your trade will be executed from this level. That will make your stop loss very, very large. So if this trade eventually hits your stop loss, you will be losing more than intended. But when it comes to the synthetic market, there is no such thing as slippage. There is no experience in terms of slippage. Now, another beauty thing about this synthetic indices is that they have some special pairs. For example, the pair you are seeing before me is step index 500. Now, synthetic indices is the only market that can actually offer this type of pair. You cannot see this type of pair, and the beauty part of it is every pair you will see under this currency market, you can still find it on the synthetic market, right? You can come to this point and then look at forex market, and you will see this is AUD this is AUD So all the currency pair are still available under synthetic indices. So, but you cannot see step index, you cannot see the likes of boom and crash, you cannot see the like of volatility 75 index in currency pair. So if you are interested in trading pair that have neat structures like this, step index 100, step index 500, job indices, volatility indices such as this, see, these are different volatilities that you can actually trade. This is volatility 10 1s, volatility 10 volatility 25 and all of this thing. This is volatility 75 index, which is one of the most popular volatility that is producing a lot of money for traders. So if you're interested in trading pairs such as this, you need to actually make a switch to synthetic indices. And to make your work easier, there's a link in the description of this video, which is a link to this broker, right? You can actually register your account using that link. Okay, because the Reef is the only broker that offer this pay. If you are using Xness, Hampton Market, Infinox, OctaFX, and many other brokers out there, you can never see this pay. The only broker that offers these synthetic indices is actually the Deriv broker. So that is why I have made the link available for you in order for you to save you the stress of you know looking for making the wrong choice or jumping from one broker to another. So that is pretty much about this video. I hope you've actually learned something, and if you enjoyed this video, kindly make sure you don't forget to subscribe to this channel if this is your first time of viewing my content. Also, don't forget to join our Telegram channel. We drop daily update. There is free signal for you to trade, and in case you are interested in taking your trading journey to further, you can actually have the opportunity to learn with us with our private uh mentorship group. Okay, so this is where we'll be stopping today, and I hope to see you in our next video. Peace out, guys.